Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and today I have with me Aldo Monteforte, CEO and founder at the Floow. Aldo, thank you for joining me today. How's it going?
Thank you, Tony. It's wonderful to be here.
Awesome. And you are out in London, right?
That is correct. I spend most of the time traveling across UK, Europe, and North America. Today I'm in Milan, of all places.
Oh, awesome. If I'm not mistaken, Milan is where Matteo Carbone is originally from. I've been to Italy, but never to Milan. So thank you for joining us today. Happy New Year. We're recording January 25th, so I feel that this is one of the last couple of days that I can still say Happy New Year and make any sense. So we always give the guests a chance to give the elevator pitch. What is the Floow? And by the way, for anybody listening on the audio side, not the video side, that's Floow with two O's. So Floow, but pronounced the normal Floow way. So what is the Floow?
That is correct. And thank you, Tony, again. It's a very simple introduction because everything we do at the Floow is inspired by the objective to make mobility safer. And it just so happens that we execute on this vision by partnering with some of the US and the world's largest motor insurance organizations. We provide motor insurers with a suite of technologies and services that help them go to market with connected products, with connected insurance products. So products that enjoy a degree of digital connectivity and data transfer between the policyholder and the carrier. And carriers use the insights that we produce to improve their understanding of risk, the pricing of their policies, but also very important core to what we do. We help communicate with the policyholders, typically through apps, through smartphones, in a way that make policyholders more aware of the risks that they take when they drive, with a view to help them condition and improve their behavior in the direction of greater safety and responsibility behind the wheels.
Okay, so in my own experience, it's been a few years. This was probably back in 2015, so a good 7 years, which is a lifetime in the technology space. I myself experimented with Liberty Mutual's telematics device. So at that time, it was a connected to the car, right, or to the carport, and then there was an app connected to it, and I got a discount that I've kept for years and years. But what I really remember about the experience is that it would beep at me if I accelerated fast or hit the brake a little fast, and I personally, I enjoyed it. I felt like it was making me a safer driver, and I think I don't speed, so I think I'm a safe driver. But I felt like it was making me a safer driver. The experience was pretty easy. So now that was back 7 years ago, right? So I'm curious, what is it looking like today? I'm guessing that there's no device to connect to the car, and what are you guys seeing when it comes to modifying people's behaviors?
Yeah, and I think, Tony, that what you experienced was very much a popular way of collecting data back then through the insertion of a OBD, onboard diagnostic compatible device in the vehicle. And when we started back in 2012, we did on the hypothesis that we could use smartphones as sensors. So what was then almost a heretical idea that you could use the sensors in a common smartphones to monitor your behavior as a driver, fast forward to today, has become very much mainstream. And so many insurers these days go to markets with connected products that no longer requires the installation of a device in the vehicle. The sensors that are natively built into popular smartphones are very much used to extract the data that is then converted into scores, into analytics, and provides sufficient information to insurers to determine the extent of the discount. And of course, this also makes for a much simpler experience for the end user, for the ultimate policyholder. However, what we see happening more and more is, another important phenomenon has happened, and that is the advent of natively connected vehicles. So right now in North America and Europe, 95% of all new vehicles that come to market are natively connected. And the vehicle is a massive trove of valuable information from an insurance standpoint. And we are convinced that data coming from vehicles in isolation, as well as combined with data coming from smartphones, will set the future for connected insurance. And as you can imagine, this means super easy, friendly experience for the end user. No need to install hardware. Whilst at the same time, the user can benefit from the technologies that are already built in cars, as well as technologies built in smartphones. And these two objects, these two data sources, the vehicle and the smartphone, together help us develop a best of both worlds vista into the policyholder, which means helping insurers develop even more precise and predictive insights and scores and algorithms, but also it allows to craft novel experiences for the end user. A lot of the data generated from the car can be utilized to build richer experiences within their insurance policy that we expect will generate more engagement and more delight, a better response from end users, particularly around the topic of safety and responsibility, let alone the ability to, for example, diagnose the manifestation of an accident using the sensors that are built in the car itself. That's another very meaningful avenue of development that we see ahead, which takes us to a different world from your 2015 box-based experience, if that makes sense.
Okay, since I'm a remote worker nowadays, a true digital native basically. So I have a car, but I don't commute every day. I also don't have kids, so I don't drive them to school or anything. So I'm still driving my 2012 Prius. So yeah, I hadn't even thought of the fact that and I never realized that holy crap, 95% of new vehicles are connected natively. So I'm guessing that then the problem is no longer how do we collect the information. I'm guessing the problem now for the carriers is how do we digest what is now a ton of information from every one of our drivers that is willing to let us get the information.
Absolutely, you're completely right. I think you have nailed two of the main issues. One is making sense of all the data. We brought to market a solution. We called it Floow Fusion, which came to market last year. It's called Fusion, Tony, precisely because it fuses data coming from the vehicle and data coming from the phone. And we demo it using a BMW just for convenience. And that BMW alone gives access to 150 data fields. So the vehicle is very rich in data assets that carry significant actuarial insurance value. Like, for example, how much fuel is left in the tank. We know that predicts with claim propensity, however awkward that may seem. Or how many people are sitting in the car, wipers on or off, pressure in the tires. And 150 different data fields, all with varying degrees of actuarial, say, value attached to them. And so one challenge is making sense of all these data. And admittedly, different vehicles come with different data fields, different formats, but the common denominator is you have access to a ton of potentially valuable information. And clearly, this is a problem that we help solve. We are in the business of ingesting and making sense of all this data on behalf of the carriers. And we help convert all of these also in valuable experience for for the users themselves. So there is a lot that is happening in the space.
Oh wow. Okay. I- I fell in love with insurance 12 years ago, largely because of things like this. Things like learning that fuel left in the tank is a predictor of accidents. So random. I mean, it makes some sense once you think about it. So I absolutely love this. Um, what is the implementation process look like? So as a carrier, first of all, where do I need to be technology wise? Like here in the States, at least, the carriers have been investing billions of dollars to move to Guidewire and to move away from home built systems into Guidewire or Duck Creek or other off the shelf solutions to get to the point where they can interact via APIs. Where do I need to be in my technology journey in order to be able to implement you guys?
So we have partners across North America, across many parts of the world, and all of them have different systems that we need to integrate with. So we have ourselves moved into an API-based framework to facilitate and make the consumption of our insights and scores as easy as possible and facilitate the integration process. So we typically enable partners to connect through whatever set of platform they have in place and provide API-based access. And sorry, one point that I wanted to add in relation to the what needs to be in place for a solution like this to operate is user consent. Okay, at the end of the day, we are dealing with data that belongs to end users. And again, different jurisdictions may differ on the nuances, but the fundamental common denominator is the data belongs to the end user. And so it's very, very important to have in place a robust user consent process that makes sure that you as the owner of the vehicle are in control of the process whereby third parties are ingesting and processing your own data. I think that combined with the ability to ingest massive volumes of data, make sense of them, are two of the elements that we contribute to help carriers deploy. And we do that through a fundamentally an API-based model that makes the ingestion of our data into whatever system they have in place, whether it's Guidewire, Duck Creek, or any other provider that they may have selected.
So you touched on something very interesting, and I think that it here in the U.S. So I'm originally from Costa Rica, and I've noticed in the time that I've been here in the States, which has been about 20 years, that Americans, especially the older generations, can be really sensitive about being tracked, right? They don't like the idea of being tracked. Now, the younger generations, I think understand that we're always being tracked. We might as well get some benefit from it. And the important part really is to have control over it, right? To be told properly and agree properly with understanding of what's being done with their data. So I'm just curious if the adoption is lower here in the US that compared to Europe by the user.
Actually, it is a great point, and there is definitely a generational divide or a demographics-based attitude towards our solutions, and we find that across the globe. So yes, some markets are, for various reasons, a bit more advanced in the adoption. Like, for example, the US, Italy, the UK are more advanced than, say, Germany, France, Japan, in the penetration of connected products, although the trend is pretty similar, and that is towards more adoption of connected products. But leaving aside the different levels of penetration, the attitude, the consumer's attitude towards the product has a certain level of correlation with them belonging to a given age group versus another. And typically what we find is, yes, there is an attitude by younger generations of saying we are always tracked and therefore, what's the difference? But that barrier kind of falls off when people understand the benefits and the trade-off here. And there is an important trade-off. Like, for example, parents may become more favorable towards the adoption of connected product when they see that it can help their children become safer, be safer when they drive. And or even older generations change their response when they are presented with the rewards and the benefits that can be unlocked by virtue of driving safely. Or with COVID, when lots of people all of a sudden could no longer commute to their office and they were driving less, we experienced an explosion in the demand of insurance products that would recognize the fact that people were not driving. And all of a sudden the notion, oh, there is a benefit in being tracked. Now, that said, the notion of tracking polarizes all audiences. And there is always going to be a lot of sensitivity around the topic. From our perspective, as partners to carriers that want to deploy this technology, the emphasis is on the benefits. Imagine a product like this, Tony. Imagine a product an insurance product where you don't have to fill any lengthy questionnaire, okay? You are observed and rated based on how you drive. So very convenient, simple product to consume. Imagine that this product is able to recognize that the quality and the quantity of your driving, and you get rewarded. Imagine a product that can detect automatically that you had an accident, and so rescue can be activated immediately. I mean, this kind of modern smartphone-centric product, because the experience clearly would be vectored through a smartphone, powered by the reliable, robust data generated from the vehicle, is the modern example of the kind of insurance product that will mean fairer pricing, and it will mean the ability to be helped when you need it most, typically at the point of an accident. And to the extent that our partners, the carriers, can illustrate these benefits, all the surveys and the market research that we conduct point to users being in favor. I'll give you an additional example. A lot of insurance products are based on credit rating, right? So your credit score is a factor in determining your premium. And it's a very robust predictor because there is a proven correlation between credit score and propensity to claim. But it's something that most people cannot change, cannot affect, and therefore there is, in the US, we observe also a growing debate around how fair it is to, particularly from certain regulators, how fair is it to utilize a factor that people have little control over. And so if you think of the fairness of a system where you are rated based on how you drive and you can influence that, then we find that consumers start to respond, and regardless of their demographics, if that makes sense.
Yeah, no, that makes perfect sense. The credit score issue when it comes to auto insurance is big, and we're gonna have to continue to improve. Right, basically the credit score is a good proxy, but is it fair, especially now that we have technology that can observe your individual driving instead of making assumptions based on correlations. What kind of bottom line results are the carriers that have implemented you guys seeing? Like, are they seeing an improvement in loss ratio? Are they seeing better retention? Yeah. Like, what are the main benefits of once everything's implemented and you go through renewal cycles? What are the main benefits for the bottom line?
Yeah, once everything is implemented, on average, we see carriers taking home up to 10 points of combined ratio. So if their combined was 98%, it goes down to up to 88%. Now, where is that benefit coming from? It's from a variety. There is a variety of drivers at work. Of course, one driver is negative. It is the cost of implementing the technology, so that would create an increasing cost. But then it's more than offset by a degree of self-selection, which still works. So typically when you offer this product, there is, when you offer a connected product, there is a natural tendency by those drivers who are willing to be monitored to select that product, and they tend to correlate with lower risk. Then you have fraud, the fraud prevention element that comes into play. It's much less prevalent. The notion of fraud is much less prevalent in a connected product. There is the FNOL element, the first notification of loss, the fact that we are able to help insurers identify a crash when it happens, or to reconstruct the crash accurately, contributes to reduce the cost of claims. There is the so-called Hawthorne effect, which is a well-known effect studied in psychology, whereby when people know that they are being monitored, they change their behavior, and that's a positive change, of course. Then we have the impact of rewards in education. The fact that you can consume as a user of a connected product, you can visualize your trips, you can see where you may have done things that were potentially conducive to a claim. So all these factors, when are taken into account, they explain the meaningful reduction in costs between a traditional portfolio and a portfolio made of connected policies.
Perfect. And really, I don't have to say this for anybody who would be a potential client, that they understand this, but for the younger listeners, 10 points is a huge change for a line of business in the US, at least, that has a hard time being profitable, right? That is always running kind of in that 90, 95, 98% on a good year, right? So that's absolutely fantastic. Kind of to finish up, so you've been working on this for 10 years. How did you realize that this was a need? Like what led you to try to solve this problem?
So I had been working in the space at a company called Cobra Automotive Technologies for the prior 10 years, and we had developed a black box based solution. However, the focus at that time was very much around, well, in the event of a theft, let's recover the vehicle. And in the event of an accident, let's try to reconstruct what happens. It was all, if you think about it, it was all about something bad has happened, let's deal with that. And the idea that I couldn't help getting out of my head was, hold on a second, what happens in that 99.9% of the time when nothing bad happens, which is fortunately the reality for most of us? Why can't we build a version of this technology that will predict and prevent, or will help insurers, rather than detect a damage, a bad outcome, and then deal with it, predict and prevent the manifestation. And so that led to think, hold on a second, if we could develop the data science needed to accurately predict if driver A is going to have an accident, because we have access to very granular data about the driving performance of this individual. And if we then acted to condition, to nudge, so there was a lot of psychology that went into the idea of nudging users, then maybe we can prevent an accident that would have happened otherwise. And that has been the driving vision from the beginning was, God forbid, insurance is about bad stuff. And, when that happens, we need to address it in the best possible way. But motor insurance is mostly about nothing bad happens for most of the time. I mean, on average, your average policyholder will not have an accident for 7 years. But some will. And so if we can identify those at risk, and we can nudge them, and we can move them from the worst part of the distribution to a better place, everybody wins, right? And so that's what really inspired Floow to get us into this line of business. And it turned out to be a good hypothesis, because yes, you can identify those at risk, you can nudge their behavior, make them safer, and you can do that with these novel technologies. Like 10 years ago, people thought we were crazy to use smartphones as sensors, and today you can combine smartphones with data coming from cars, and the insurance can and should take advantage and become a partner in risk prevention with their policyholders. So that was a key driver.
I think there's a couple of great lessons from your story for future insurtech founders. Number one, going to something right? You had 10 years of prior experience, and number two, don't be afraid to be told you're crazy. You might just get it right? Like thinking of using the smartphone, which at the time maybe didn't have the right sensors. But fantastic, super interesting. Thank you very, very much for your time. When this goes live, I will tag both you and the company on LinkedIn. And yeah, it's been wonderful. I look forward to see you guys continue to grow here in the States and help us make this safer, because clearly we need help.
We all need that.
Exactly.
We all do.
It's a win-win, right? It benefits society in preventing accidents, preventing injuries, and that's on the road. I don't have kids, but when it comes to new drivers here in the States, 16-year-old drivers, historically horrific losses the first few years. So anything we can do to predict that, to prevent that, is a win-win. So thank you for your time.
It was awesome, Tony. Thank you so much. It was great meeting you.